We have this new round of tariffs that have gone into effect, or will go into effect Monday, I should say. I want to talk about the process leading up to it, because you had a lot of comments come into the trade representative's office. And almost uniformly, U.S. companies said this is not a good thing. This will not help our business. This will not help employment. Why do they all have it wrong?
Well, I think that the long objective is to open up U.S. markets to China. And if we're successful at opening up the markets to China, then that'll be great for U.S. companies. And so that's really our long-run objective. And right now, we're in a situation where China is abusing the trade policies that exist, abusing the WTO, and we've got to step in there and get them to correct that. We have a long list of demands. We're eager to talk with them. But if they don't come around, then, of course, we're going to have to impose tariffs, which is just really retaliation for the stuff that they've been doing to us for a long time. If you go back and look at the economic report of the president last year, we estimated that probably between 1% and 3% of GDP is being stolen by China every year from us.
Okay, so far we have, as of Monday at least, it'll be about $450 billion worth of imports. There's talk, the president has raised questions about another $267 billion worth of tariffs. We don't know whether that'll happen or not. But at some point, that must affect GDP growth in the United States. What have you advised the president about the possible effects on GDP growth if this continues?
I can't talk about my discussions with the president, but the way to think about it is that if we can buy the stuff from somebody else, then it has very little effect on us, but a big effect on China. And so certainly in the early tranches of tariffs, the USTR has looked at things that there are very close substitutes from China for. And that's why you've seen a big effect on China, but a very small effect on the U.S.
So you said in the early stages, one of the issues is timing here, because in the short term, for example, consumers don't see it right away because it takes a while to work its way through the supply chain. But we now have Jack Ma, for example, from Alibaba, said this could last 20 years. There are other people saying this could last a long time. What are the economic effects if, in fact, the Chinese don't back down, we stick to our position, and this goes on for years?
Of course, that's what we hope doesn't happen. But the bottom line is that the long-run effects of this are much smaller than the short-run effects, because as you mentioned, in the short run, you get disruptions of supply chains and so on. But ultimately, the supply chains move around if we're unable to work out our differences. But again, I think that in the end, we will work out our differences. We're grateful that they're willing to talk, and that, of course, we are as well. We have a very well-defined list of asks for China, and I think that there's lots of room for us to reach an agreement. But the bottom line is that we're starting from a situation where they're really misbehaving.
Yeah, and I think pretty much everyone agrees with that. A lot of those U.S. companies that commented would agree with that. A lot of our European friends and colleagues would agree with that China needs to reform what it's doing. The question is, how much pain are we willing to suffer in order to get there? And again, I come back to the basic question. As I understand what you're saying is the U.S. companies are wrong, that they just don't understand their business properly because they think this is going to hurt them.
U.S. companies are wrong. What I'm saying is that we have a long-run objective that they share. And previous presidents have attempted to get China to behave and failed. You have to concede that that's true. President Trump has a different approach, and it's an approach that's already working. If you look, that we've made a lot of progress with Mexico. We have a deal with them. We're hoping to close a deal soon with Canada. We've made an amount of progress with the EU, opening up U.S. markets to exports from the U.S. so that U.S. workers can make stuff here and sell it around the world. As we documented in the economic report of the president last fall, our trade deals were incredibly asymmetric. We opened our markets to other countries, but they didn't open their markets to us. President Trump insists that we make progress on that, and he's being very successful. Now, China is going to be the toughest nut to crack for sure, but we're very happy to see that they're willing to have more talks, because we are as well.
So you said that they're well-defined objectives. Could you just give us a sense of the top three objectives? When will you know you've succeeded, you've accomplished what you want to do? Because despite what you say, we talk to a lot of experts, a lot of companies who say we're not sure exactly what the U.S. government wants.
Right. Well, that's by construction, don't forget, because what's going on is that you go into a negotiation with your list of demands, but you don't publicize them. And so, of course, we've got very clear ideas about what we want to do, and it's been worked on by Secretary Mnuchin and Bob Lighthizer and Peter Navarro and the whole trade team. And, whether we get all of that or not is something that will be worked out in negotiations, but you certainly can't go into negotiations broadcasting what you're asking for.
No, fair enough. I understand that. And I understand also why you don't want to say exactly what you told the President of the United States. But am I understanding that basically on your projections right now, given where we are, let's assume we stay at the $250 billion. Forget the other 267, stay at $250 billion, and it continues in 2019, it will not have a material effect on GDP growth?
I think that it would have some effect. A precise estimate would depend on, whether we go all the way or not. But yeah, I think that the idea that GDP growth is north of 3, maybe even going to be 4 in the third quarter, that definitely would still be true no matter what happens with this.
So, Kevin, as you said, you are hopeful this will not go into 2019, into 2020, for example, and beyond.
Did you respond? I've lost.
Sorry, can you hear me? Can you hear me, Kevin?
Yeah, I apologize.
Sorry, if we lost you, Kevin, can you hear me?
Oh, yeah, I got you back now.
Okay, great. Sorry. We have a tough time going all the way down to Washington. It's so far, from New York.
Yeah, that's right.
But I wanted to go back and say, your hope and your plan is for it not to go into 2019 and 2020. You're hoping it's not going to go that far. Do you have reason to believe, in fact, that the two parties can come together? Do you have any information from inside? Not asking specifics, but do you have any indication that, in fact, the Chinese might accommodate what we need to get done?
Well, they haven't in the past. And, I'm not a negotiator. I'm not part of the negotiations. And so I have no inside information about the talks that, might begin or have been ongoing. But I can say that it's not difficult to envision a world where China agrees to abide by the rules that the rest of the World Trade Organization member countries abide by. And if they do that, and if they open their markets up to U.S. products and make their trade fair and reciprocal, as President Trump has asked, then I'm sure that the tariffs would go away. And so, given that what's being asked of China is something that is already a policy adopted by most civilized countries on earth, it seems to me that they eventually ought to get there.